Good morning, everyone. Yes, very good morning to all. It is refreshing to meet you all early morning. And I really feel so excited. I feel so charged up whenever I have to engage a class with you all because of the interaction, the involvement that you all show, the regular interaction, and also very good inputs from many of you all. So very good morning, Navneet, Lingar, Ajay C, Adil Khan, Satish, Dhanalakshmi S, V. Balasubramaniam. How do I pronounce your name, beta? Achaya M. Am I right? Achaya M. Radhesham, Ashlesha, Santosh, Kumar, Virali, Shamli. Yes, very good morning to all. So the topic at hand today is the best topic according to me of the subject of income tax. It is the topic of business head. Now, why I favor this topic a lot? For two broad reasons. First, as a student, you are very much concerned, you are very much inclined towards your exams. So, let me first tell you something from the exam perspective. The reason why I like this topic a lot, rather why this topic drives me a lot to study this again and again, is because of its relevance in your exams up to the final level. And let me tell you, whatever questions you are going to solve, the comprehensive question, in fact, even the individual topic question, many of these questions are directly or indirectly connected with this topic. So the point is that this topic has a direct bearing. This topic has a direct impact on your exams and at all levels. So it is going to continue till final level. And in fact, as I said, the comprehensive sum at final level, you have assessment of various entities like the companies, partnership firm, AOP. In every topic, the sum is directly, indirectly part of this head PGBP. But this is not the only reason. That is only up to exams, right? My major driving force for this subject is its relevance in real practical world. So when you are in profession, like right now, immediately after your interclearance, you will be joining your articleship next year, immediately after your results. And once you enter into articleship and you're doing anything in income tax, let me tell you, the most regularly used topic in income tax is either TDS, which will be used on daily basis. And whenever you are going to do any computation of your clients, the topic that you would be using in the computation majorly is this topic. That is what is the relevance, that is what is the expanse of this topic. And that is why it is very important to understand, prepare, and to also take special efforts to do this topic. Now, why I am stressing so much? You have to take special efforts, you have to put in a lot of efforts. The reason is, initially, when you start reading this topic, I found that students have a challenge. I don't know how many of y'all have tried studying this topic, but whoever has tried doing this, at the start, they always complain, sir, the topic is very difficult, the topic is very confusing, and so on. Let me tell you, that is not the case. If you prepare for this topic, in a systematic manner, in a manner which is desired, which is required for this topic, I'm sure suddenly you'll find fun in this particular topic. So, what is that approach? That is what I will try to inculcate. And please remember, students, for anything big, for anything special, for anything extraordinary, you have to put in equivalent effort. So you cannot assume that despite of I giving you any best technique or any effective technique, it will be automatic. It has to be practice, like how the word is there over here, profession, and we are going to be in profession. Profession is all about practicing and expertising yourself in a particular domain. So let us start with this. Now, in order that you understand this topic, let me first, let me first start with your queries, because that is very important. Because in this topic, when I will teach anything, it will also connect you to other topics. So let me first take this first 5, 7, 10 minutes to discuss your questions, queries, if any, till now in this subject. Even if you have read something else from the other topic also, that is fine. If you have studied and if you have doubts, that is fine. But try to be very specific with your question. If you want, I'll unmute you so that you can ask me properly. And if it is a very specific doubt to one question, then you will have to give me time, because then I'll have to locate where the question is. So that may take time. But if you have any conceptual query, any doubt where there is a question relating to understanding of a provision or of a particular treatment, then you can ask it first. So students, if you want me to unmute you for this, raise your hand, I'll unmute you. And if you can type, make your query clear so that it will be easy for me to address your query. Yes, we take this first 5 minutes for your query resolution, because that will be necessary when we are handling this topic, because this topic will cover even references to other topics. Please let me know, students. So Navneet has raised a question. Again, let me see if I can understand the question properly. So he says that, sir, is there any case of HP where everyone gets maximum deduction under 24B of interest, that is 2 lakhs, and everyone gets maximum 2 lakhs if 4%, 8 lakhs, any provision? Okay. So firstly, I'm not getting the meaning of the word everyone, but fine, I'll try to answer. See if it addresses your query. If not, you raise your hand, I'll unmute you, you can ask me. See, what I've understood from your query is that whether this 2 lakhs is available to everyone. See, the answer is, firstly, 2 lakhs is a limit applicable only if the property is categorized as self-occupied. If your property is let out or deemed to be let out, in that case, beta, 2 lakhs is not the limit. You can even claim 10 lakhs. You can claim even 50 lakhs, means the actual amount of interest is allowed. And in that case, it may be 2 properties, 4 properties, 10 properties. For any number of properties, the assessee can claim any amount of deduction towards interest, obviously satisfying the conditions of interest, that the loan should have been taken for the purpose of property. In that particular case, you should justify that this is the loan utilized for the property, etc. Yes, when it comes to a self-occupied property, again, maybe your question, everyone, is whether individual is allowed, HF is allowed, company is allowed. The answer is yes. In house property chapter, there is no provision which is limiting anything only to individuals or HF, like you find in other topics. Similarly, in this topic also of PGBP. You will not find any such thing. Just a minute. So if you're asking everyone, I am interpreting everyone to mean that you are asking, sir, whether individual is also allowed the limit of 2 lakhs, company is also allowed. Answer is yes. So firstly, HP head is not dependent on who the owner is, whether it is a company, it is a individual. So for everyone, every person, if I'm interpreting your question correctly, 2 lakhs limit is available if the property is a self-occupied property and the basic conditions provided that the loan should be taken for construction or purchase, it should be taken after a particular date, certificate is available. All those are satisfied. Yes, 2 lakhs is available, but the 2 lakhs will be utilizable up to maximum 2 house properties, 2 self-occupied house properties. And also, yes, that 2 lakhs is not per house property. So if you have 2 self-occupied properties, together you can take 2 lakhs. I hope I could address all your queries. Shamli is saying, sir, in case of co-owner. Yes, so Shamli, in case of co-owner, you're right. In case of co-owner, the property, the 2 lakh limit is allowed per co-owner. So if let us say there are 4 co-owners, maybe what Navneet is trying to ask because he has given example of 4, and property is 1, but the owners are 4. If the property is self-occupied, all conditions satisfied, each co-owner will get 2 lakh limit. No. Navneet, I have unmuted you, beta.
Good morning, sir.
Very good morning, beta. Please tell me.
Sir, actually, I have solved all the illustrations and questions of the study material of house property. And sir, in the case of I have the question mainly in the case of co-owners. Okay,
That
so
is
when
why
I
I
was
think Shamli
solving,
also pointed out that. Yes, go ahead.
yes. So, sir, when I was solving the question of co-owners, as per the study material rules or income tax rules, firstly I have to calculate the total income and maximum in aggregate. I can take the deduction of rupees 2 lakh or 30,000 as per the case. In the case of construction or acquisition, 2 lakh, and repair maintenance 3,000. If all four conditions are satisfied, okay. And then if the corners are 2%, then I can divide 50-50% income and will be taxable in the separate hand. So I have a doubt that if there are two corners and interest paid is let us assume 1,50,000, so both can claim 1,50,000, 1,50,000, that is 3 lakh, or I have to claim 1,50,000 aggregately in the answer, and then what outcome comes, I have to divide in the two parts.
Okay. Keep yourself unmuted only. Now, see, first rule is 2 lakhs is not a flat deduction. It is a limit. Now, whenever you say anything is a limit, you have to always compare it with your actual cost or actual, in this case, interest, right?
Okay.
Now, in your example, you have to first see what is the actual interest of that particular year. Now, if the actual interest is 1.5 lakhs, so whatever is the loan, the total interest which is required to be paid in this financial year is 1.5 lakhs. Then you cannot take 1.5, 1.5 to each corner, even though the limit to each corner is 2 lakhs. But please understand, 2 lakhs is a limit. See, one thing is you will get always 2 lakhs. That is a different thing. We call it as a flat deduction. This is not flat. 2 lakhs is the maximum limit, which means you have to always check it with your actual interest. Now, in this case, in case of owners, what will happen? See, first, the property is let out. If the property is let out, there is no question of 2 lakhs because 2 lakhs limit will come only where the properties are self-occupied. Also,
Yes,
for
sir.
the time being, keep that 30,000 aside. We will presume that you are satisfying all the conditions for availing the higher limit of 2 lakhs. Now, if the property is self-occupied, you have to even forget 2 lakhs. Then simply do firstly the computation of the property. You find out the AR, ER, whichever is higher, GAV minus municipal tax. Everything is done in the regular manner. Find the final HP income. And This final HP income is divided between 1, 2, 3, 4, 5, 6, whatever is the number of owners in the ratio. Point number one. Point number two. If this property is a self-occupied property, now when you do computation, what will happen? GAV, nil. Municipal tax paid is there, nil. Standard deduction by default will be nil. Now when you come to interest, whatever is the interest, let us say the interest is 5 lakhs divided between the co-owners. Now let us say you, me, and Shamli are co-owners in this particular property where the interest for that whole year is 5 lakhs. As per the shares of this HP, your share in interest is 1 lakh, my share in interest is 1 lakh, Shamli's share in the interest is 3 lakhs. This is how the 5 lakhs is divided on the basis of our ratio. Now, since the 2 lakh limit is per person, hence in that particular case, since the limit is 2 lakhs per person, I will get 1 lakh full deduction because it is within 2 lakhs. You will get 1 lakh full deduction. Now, deduction means to that extent, interest is allowed. So, in your hands, the HP loss is 1 lakh. In my hands, the HP loss is 1 lakh. Now, when Shamli is doing the working, her share of interest is 3 lakhs out of 5 lakhs. She compared it with 2 lakhs. So for her, the limit or the deduction is 2 lakhs and the loss is 2 lakhs. So finally, the answer in this particular case will be we are three corners. In my computation, I'll show loss of 1 lakh. From HP, you will show 1 lakh. Shambli will show 2 lakhs. Is your question answered now? Or is
So,
there
sir,
something else left? Hmm.
yeah, as per your example, you said that interest paid is 5 lakh and Samli share is for 3 lakhs interest to be
3 lakh.
claimed.
Hmm.
And I have to claim 1 lakh, and you can also claim 1 lakh rupees in case of first property.
Because your and my share is one fifth, one fifth. Her share in the property is three fifth. That is how I
350.
divided 5
Yes,
lakhs
yes.
in. Go ahead.
So, sir, if the property is self-occupied, okay, and there will be a limit of rupees 2 lakh if it is taken for construction.
Hmm.
Sir,
Construction or purchase. Hmm.
yeah, construction or purchase, and another case it is 30,000. So, I can also claim 1 lakh, you can also claim 1 lakh, and Samli can take 2 lakh rupees. So, it will be 4 lakh rupees aggregate, or it will be aggregately only 2 lakh rupees maximum interest limit.
Correct. So that is what I was saying, trying to explain. This 2 lakh limit is per person, per assessee. So in
Okay.
case of joint owners, you also have the limit of 2 lakhs. I also have 2 lakhs. Shamli also has 2 lakhs. But your
Okay.
share of actual interest is 1 lakh. So you get the deduction of whichever is higher 1 lakh. I
1
get the
lakh.
deduction of whichever is higher 1 lakh. And she gets the deduction of whichever is higher, which comes to 2 lakhs. So total
Okay.
together, we will get the deduction of 4 lakhs in this example.
Okay, so when interest was rupees 5 lakh, okay, and
Correct.
I have a doubt that interest is paid only rupees, let example, 1 lakh 50,000, only 1 lakh 50,000. Samli has 3 5, I have 1 5, and you have 1 5.
So
Okay,
in this case, beta, we all have limits of 2 lakhs only. But since none of our amounts are going to exceed 2 lakhs, so whatever is your share, whatever is my share, whatever is Shamli's share, we will get the deduction. So assuming, just for simplicity, I'm not going into mathematics. Her share comes to 1 lakh out of 1.5. Your is 25,000, mine is 25,000. We three all get the deduction. You get 25, I get 25, she gets 1 lakh.
okay, yeah, I can take 30,000 of 150 one share. Okay,
Whatever. See, I've just not gone into mathematics.
okay,
So
sir.
let us say
Yeah,
30, 30, and 30, 30, and 90, correct?
30, 30, and 90. Okay.
90. So we all will get the deduction because for every one of us, 2 lakhs is the limit.
Okay, so limit will be up to what the interest is actually paid, not one lakh
That is
fifty
what is my
thousand per.
first point. That was my first point. So 2 lakhs is not a flat deduction. It is a
Okay,
limit. So compare it with the actual interest, whatever is your share, and compare it
I'll
with
get.
2 lakhs, whichever is lower.
Okay, so that's why the answer presented in the study material, that answer will be calculated. Uh, एक साथ ही आंसर निकाल लेंगे, इसके बाद डिवाइडेड टू द जो रेशो होगा 1/5 एंड 3/5 आंसर निकल के आएगा.
Correct.
ओके सर, थैंक यू.
So it means in short, to conclude, आपका जो ये शेयर है या आप जो ये 2 लाख से कंपेयर करोगे, ये आप कंपेयर करोगे, पहले आप इंटरेस्ट तीनों में डिवाइड कर लो एज पर देयर शेयर, एंड देन कंपेयर इट विद 2 lakhs, सो दैट यू विल गेट योर फाइनल लॉस। सी एच सेट सेल्फ ऑक्यूपाइड हाउस प्रॉपर्टी में वैसे भी बाकी सब नील है, आपके पास सिर्फ एक ही फिगर होता है सेल्फ ऑक्यूपाइड के वर्किंग में, दैट इज इंटरेस्ट,
हाँ
करेक्ट।
जी, वो
सो
भी
आप
लॉस में है।
इंटरेस्ट तीनों में डिवाइड कर लो, तीनों के अमाउंट को कंपेयर कर लो लिमिट से, और विच एवर इज लोअर उसको आप एचपी लॉस तीनों के इसमें आप दिखा सकते हो,
सो सर आई
करेक्ट।
हैव लास्ट लास्ट क्वेश्चन। क्या कोई ऐसा केस है हाउस प्रॉपर्टी में जहाँ पे मतलब अगर जो जैसे मान के चले हस्बैंड वाइफ है, उन्होंने जॉइंट लोन लिया हुआ है जॉइंट नेम से, और टोटल इंटरेस्ट पे 2 लाख का है, और उनको आईटीआर फाइल करना है, तो क्या दोनों लोग 2-2 लाख का क्लेम कर सकते हैं सेपरेटली इन इन आईटीआर इनकम, लाइक सैलरी
क्या
इनकम,
हाउ
अदर सोर्स?
हाउ इज दिस क्वेश्चन इज करेक्ट? आप बताओ लॉजिकली ये क्वेश्चन करेक्ट है क्या? सबसे पहले इज इट करेक्ट
सर जस्ट
लॉजिकली?
क्यूरियोसिटी है, लाइक
नहीं, पर क्यूरियोसिटी कैसे हो सकती है? मैंने आपको आंसर शुरुआत कहाँ से की थी कि योर इंटरेस्ट वॉट एवर इज एक्चुअल उतना ही डिडक्शन मिलेगा ना बेटा, तो फिर आपका क्यूरियोसिटी खत्म हो जाना चाहिए ना वहां पे। आई आंसर्ड दिस फर्स्ट,
यस
आई
सर,
आंसर्ड दिस
एज
फर्स्ट,
पर द
डिडक्शन कैन नॉट एक्सीड एक्चुअल इंटरेस्ट ना।
यस सर, एग्रीगेट
सो
जितना
जब
पे
एक्चुअल
किया होगा
इंटरेस्ट
उतना ही
आपका
जाएगा
दो
इन द
लाख है
रेशियो
तो
ऑफ द
2 लाख,
ओनरशिप।
हाँ 2 लाख से ज्यादा दोनों का मिला के 2 लाख से ज्यादा होना ही नहीं चाहिए, सिंपल।
ठीक सर, ओके, थैंक यू।
ठीक है, ओके। नाउ now we go to this topic. If anybody else is not having any query, so let us understand this topic of business head in detail. I am starting with the working part first because that is where students may find a challenge. If somebody has started reading, you may have slightly felt very much burden. No problem. What I'm trying to explain, if you understand, understanding the provisions is the second part which we'll be dealing with. But first, understanding the practical part. Now, how you are given the questions on this head. Now, whenever we will talk about business head, in business head, you will always find in your questions a profit and loss given. So business head questions will have a profit and loss. I'm just showing you the T format because from your 11th standard, when you studied this subject and the profit and loss statement for the first time, it was in vertical, it was in horizontal format. Now the formats are vertical. But just for explaining you the conceptual part, I am taking the vertical format. So this is your trading and P&L account combined. On the credit side, you'll have your sources of revenue, which will be, let us say, sales, interest or dividend received, profit on sale of assets, and as a individual, you may have received something like gift. So these are different items of revenue on your credit side. Maybe you have some property given on rent from your house property. Fine. On your debit side, you will again have all the expenses starting from purchases, salaries, depreciation. Maybe some personal expenses are also put like salary of household staff, and net profit is given. Along with some additional information will be given. So same like a typical accounting case, like how in accounts you earn trial balance and additional information you prepared profit and loss account. Here you will be given a format, maybe in horizontal format, additional information. Now please understand one thing. In next 15 minutes, I want everyone to be very attentive so that you topics tickle part. Once you understand that, on that basis, when you theory, it will be very easy. Now, is important when it comes to income tax compliance. Income tax, which is not there in accounts. We compute income headwise. So when we are doing computation, into five categories, five heads, five sources. So we all know what are those five categories, five heads: from salary to income from house property, business head, which is called as PGBP, capital gain, and other sources. Now, this is what is not present in accounts. Now understand the main point. When you would be given this trading P&L, trading P&L is as per accounting principles where there is no concept of head. Whereas if you have to derive income as per income tax, that has to be derived, that has to be computed as per the provisions of income tax law. So the first step that you need to do in any sum, especially the comprehensive sum, and as I mentioned at the start, this chapter will be very important, specifically vis-a-vis the compulsory question, which is a comprehensive sum, and comprehensive sum is generally in this form only. So the most important, you need to categorize, you need to classify as to which income is belonging to which head. Like these two sources belong to other sources. This belongs to capital head. This belongs to house property head. There may be nothing in salary sum. And then this source belongs to business head. In the eyes of accounts, where there are no heads, you as a person, you as a assessee has earned so much of income. But income tax is not interested in this. Income tax says our own methods of computing income. For this, you have to bifurcate all your income sources into these heads and apply the respective formats. So what you have to understand, students, is that for the purpose of computation of in under the income tax, your first perspective should be segregation. That is, you should have in mind that I need to first segregate, I need to categorize as to which head that particular income or expense belongs to, so that you will proceed accordingly. Now, right now, I'm not explaining you computation. I'm giving you the start, or I'm giving you the logic of what is the computation format in business head. This particular business head sum, which is also a comprehensive of sum, how to proceed. So first you have to understand this, that whatever data is given and even a net profit is given, that is not at all helpful to me directly in income tax, because in income tax, I have to compute, I have to derive my income headwise. Now, once you understand this, so what is your approach or ideology? That I need to classify both the revenue side and the expense side, because here also I may have some expense relating to some other head. For example, this house property which is on rent, in relation to that house property. So depreciation includes depreciation of so many things. It includes factory building, it includes plant and machinery, and it includes even depreciation of house property, because depreciation will calculate on every asset. So I should also know that, okay, boss, out of all the expense, this expense is also belonging to some other head, or at least it is not belonging to business head. Similarly, one expense is such that it is not belonging to any head. Why? Because it is a personal expense which is not covered in any head. It means it is also not part of business head. Next, There could be some expense which could be exclusively related to some other head like municipal tax on this HP which is let out. So again, this municipal tax is not part of business head. So what you have to understand is the first step is segregation. What I'm trying to explain from all this is you should have in mind that I have to do segregation both of my revenue side and of my expense side so that I can now categorize all the information into those respective five heads. Now, how do I categorize this? I already have a P&L in front of my eyes. I am given a lot of additional information. My first endeavor, my first attempt is to classify and segregate the data. After this, what will happen when I'm classifying and segregating? In my income tax computation, I will prepare working notes, which will be first income from HP, income from PGBP, income from capital gains, and other sources. Salary I have not written because in this data I have no salary details. So at the back of your mind, you should have this format, this particular flow in mind that I will be analyzing my profit and loss and the additional information given to classify the data under the respective heads. And then whatever data you have classified as belonging to the HP head, like firstly the rent, secondly the municipal tax, thirdly the depreciation, I will take it here, then decide what is to be done of those information. Like rent is given, rent I am going to consider here, but rent as it is may not be my answer because rent has to be converted to GAV. So then whatever is the rent which I have taken from here, fine, I will convert it into GAV applying the provisions of GAV under section 23. Whatever municipal tax is given, I will consider municipal tax. And if there is any change to be done as per the provisions, I will apply that. Depreciation, I am not going to consider here because the HP format does not allow any deduction for depreciation. But the point is still it has to be classified under this category. Why? So that you understand what is to be used for business head. Because what is very important is now, when I explain you the business head computation, you have to visualize this particular point first. So what I'm doing, I'm segregating the data into respective heads. And then once I take the data to respective heads, I know that, okay, as per that head provision, how will I ultimately find out that head's income or loss? Maybe there may be some expense which I may not actually deduct over there or I may not consider it, but that is fine. Still that expense, that revenue belongs to that head means it is not part of business head, though given in one P&L. Same thing I will do. I'll take the data pertaining to capital head in this particular format, and I'll take all the data relating to other sources head in this format. And I will do respective workings as per their respective formats and as per their respective computations. Now, once you visualize this, once you understand this, then comes the important point that how to do this working. So I'm showing it below. Now, once this is understood, that out of the total data given in the sum, the P&L and the additional information, your first step is to segregate into respective heads, take it in the respective heads format, and do the computation over there. If something like example, again, the same depreciation on house property is not to be deducted, no problem. But still you should know that it is part of the HP working because it is an expense relating to HP. Maybe here in that working at the bottom, you'll give a note that depreciation is not considered because the format and section 24 does not allow any deduction for depreciation. But still what is to be noted in your head is it is part of HP working. It is not part of PGBP working. Now, when I did this segregation and I have taken the respective data in the respective working formats, now I come to computation of PGBP. Let us say this is my working note of PGBP. Now comes the format for PGBP. I have two formats or two approaches. First approach is I will redraft the about trading P&L. So what could be my first approach? I already have a trading P&L. I will how? Now I'll consider only those items which are pertaining to business head. So now, as you can see, my profit and loss has been reduced with only those items which are applicable to business head, and the other items which are belonging to other heads have been taken in their respective formats. This could be my first way of finding out business income, format one. So again, what I have done, I've only taken the figures which are now relevant to business head, and other figures relating to other heads I have removed from it. These figures, again, now as we proceed and you study how to compute business head income, you will find again every head has its own format, has its own technicalities. Like we just saw in HP head, GAV is not equal to always actual rent. It may be different. Some expenses belonging to that particular house property may not be deductible. Like I gave you example of depreciation, repairs, maintenance. It means every head has its own condition, provisions as to what to be taken, how much is to be taken. So same thing I will do. Whatever these figures belong to business head, now to them I will apply the PGBP provisions. That is the technical part of this chapter, so that I can determine what exactly should be the amount of this, and so that I will now find out my net PGBP income. So this is my first approach of computing PGBP income. I call it as the P&L approach, because here what I've done, I've redrafted my P&L. But before that, what I have done, I have removed the figures belonging to other heads, taken them in their respective formats. And for PGBP, I'm applying this first working. Is this understood and clear to all students? Aditya has asked me, sir, HP is immobile. How can we do depreciation? Why would a building does not have depreciation? Aditya, it is immobile, I know. So only mobile have depreciation, beta. Only land does not have, no? Building has, no? It is not about movable, immobile. All immobile is not having depreciation is incorrect. It is only land which is a non-depreciable asset, hence no depreciation. It has nothing to do with movable, immobile. So many times huge, like if you would have seen, you have used those petrol tankers. They are also immobile, but depreciation is allowed. You have all these buildings, factory buildings, offices that people own for their businesses. Depreciation is allowed. So there is no restriction that immobile property depreciation will not be. Correct? Okay. So this could be my first approach of computing business head income. However, when we go further, you will find that this is not the approach which is adopted. So this format, which you find more convenient because of your connection with this since your childhood means childhood of commerce, that is standard 11. But this is not the format that we follow. So for computation of PGBP, we have another format. This is the format which is followed, and this is the format is what we will be taking forward. So this is, let us call it as the P&L method, yeah, P&L format. What is the second format? This second format, I call it as the reconciliation format. Now, what is this reconciliation format? You have again from your childhood of commerce, that is standard 11, studied this, maybe enjoyed this, that is BRS, bank reconciliation statement. And let me tell you, this concept of reconciliation is applied across all subjects. So when you will be doing your articleships, you will realize that you prepare multiple types of reconciliations and not only BRS. In fact, in huge corporates where there are multiple levels of calculations and reporting, there is one special division where the staff sitting there is only doing reconciliations. Why? Because there are multiple different data flowing, something from accounting perspective, something from company law perspective, something from costing perspective, GST perspective, income tax perspective. If it is a MNC, it has its own international country laws applicable, their separate format. So when they have multiple reportings in different formats, they need to reconcile. Now, how do you do reconciliation? What is the ideology of reconciliation? I again come back to the original P&L. Now, see, this is my original P&L given in the sum. So I have all so many figures in the P&L on the both sides. Plus, I have some additional data given here, and I need to find out my PGBP income. So right now, I'm only talking about PGBP. I've already explained that for comprehensive sum, what you will do, you have to simply prepare respective formats of each head. And out of that, right now, we are talking about PGBP. So when I have to find out my PGBP income from this data, what I can do is, instead of preparing a P&L like this, instead of redrafting a P&L like this, I will do what? I will take this as my starting point. I will take this profit as my starting point, and whatever is not part of business head, like on the credit side, this is not part of business head. On the debit side, this is not part of business head. I will remove the effect of this from my net profit. Now just try to understand this simple maths. So in reconciliation, what I do, I want to retain this. I want this to be there in my final answer. So how that can be achieved? Net profit is the net of total of credit minus total of debit. Correct? So if this is the net of total of debit and credit, I take the starting point of net profit as per accounts, and I nullify the effect of these items which are not part of PGBP. So automatically, if I nullify the effect of this, what will be left is mathematically the effect of this. What I want. Please understand. This is the crux of the PGBP format. So I have to nullify the effect of all other items from this P&L so that what is left as a result of my reconciliation statement is only the PGBP items. So how this will happen? In my reconciliation format, my starting point will be profit as per accounting P&L, this amount. Correct. Now what I will do, I want to remove the effect of these four items from the credit side. What should I do in reconciliation? Chalo, tell me fast. See, in reconciliation, you do only two things, either add or less. What I will do for all these credit items to remove their effect? Bida Mustafa, no debit credit. Here it is a statement. You have to say add or less. Super. Super. So everybody has given the best perfect answer that what I should do, I should subtract. Now I will name it. What I will call it, what I am subtracting incomes included in profit and loss, or let me even use a technical word instead of included, credited, but not taxable under PGBP. Means what? There are different incomes covered under different heads. I don't want them in PGBP, so I will be adjusting their effect. So this is the, you can say, name or the category under which those four items will come. And of those four items, whatever is the amount, I will subtract. Agreed? Understood? There are so many more messages. Pooja, please don't make such generalizations. Let me complete. Maybe you are correct, but this may go against you when we proceed. So let us not generalize things. Perfect. Everyone is correct. Now, similarly, students, I have few items on my P&L debit side, like expenses relating to house property or personal expenses or anything which is not part of business head. Possible? Now again, I want to remove the effect. Again, all these debit side items also has some effect on my net profit, which I have taken as the starting point. So I want to remove the effect of these debit items as well from my net profit. What should I do to these debit items? In my reconciliation, how should I remove their effect? Good, very good, excellent answers. Ashlesha, Pooja, Ajay, Meenu, Divya, Sumi, Neeraj, Linga R, Shamli, Urmila, Mustafa, Navneet, Aditya, Dhanashri. Excellent, beta. Very good. So, yes, Hina, correct. Very good. So, what am I supposed to do? I'm supposed to add. So, in my reconciliation, add. What I will add? Expenses debited in profit and loss, but not deductible in PGBP. So for PGBP, these are not expenses. So you do not deduct them while computing PGBP income. So this is my debit item. Again, in this, I'll make a list of those items which I do not want as expense of PGBP. It will be added. Perfect. Great. Now the main part. Pooja, this is where I did not want you to be generalized. Correct? Now, please understand mathematically. After doing these adjustments, I have reached to this amount. So what you could have derived by trading P&L account format, same thing I have reached there. Correct? This is fine. But you are forgetting that I'm yet to do one more thing. I have only removed the effect of other head items. So right now, on my right hand side, reconciliation statement, whatever is the net amount remaining after this add less, it's still not my final PGBP income. I want final PGBP income, that is income under income tax head PGBP. Still, this is not that amount. No. Still, the amount what I have got mathematically is net profit add less, but this is not at final PGBP. No. Why? Because had this been the case, our PGBP chapter would have ended today. and we would have now gone directly to solving sums, where by looking at the P&L and the additional information, you are only required to tick what? Okay, these items are not relating to business head, and put them in the reconciliation, debit, credit, whatever it is, you would have got the answer. But that is not the case. What is important is for these items which are left, I already explained in the P&L format also, I may not take the same amount of these items which are there in accounts. So in accounts, you have some sale. I may not take the same amount. In accounts, you have some amount for purchase, salary, depreciation of both these things, which are business assets. I may not take the same amount because same like what I gave you example of HP head, where you do not take the actual rent only as GAV. GAV can be different. Interest has some conditions of limits and all. Then you have a standard deduction, and in against that, no other expense are allowed. Similarly, PGBP head has its own set of provisions, own set of conditions, own set of rules, which will determine what should be the amounts that has to be taken for these expenses. So these are business. These are exclusively business items. But whether they will remain in same amount or they need to be adjusted. Point number one. This is left. So what is left is this part. Point number two in this part. So one in this part is what do I mean by applying provisions? Two things. One, what could be the values of the above amounts? So all above amounts or all above items are part of business head. I agree. But whether they have to be taken at same values. I'm not saying everybody's value will change. But keeping in mind the HP, which you have already recently done, you'll understand what I'm trying to say. What you are taking in accounts may not come in PGBP as far as the amounts are concerned. So first, when I apply PGBP provisions, I have to check what values, what final figures will be coming in PGBP. Two, are there any other items left out? What items? Items which are not debited to P&L, but they should be treated as expense under PGBP. Those items which are not credited to P&L, but should be considered as income under PGBP. Possible. All these details you will get from here. That there are such items, both of debit and credit side, which are not part of accounts. Why not part of accounts? Because accounts has its own logic. Account has its own accounting principles, accounting conventions, accounting standards. Accounts is prepared using them. So accounts may not consider certain items, but as per PGBP provisions, we consider those. So when you are applying PGBP provisions, two things will happen. One, whatever amounts or whatever items are already there in P&L, which has to come to PGBP, whether the values will be same or you have to do some changes, some workings in the values and change the values. And two, there could be some more items. Items means both expenses and incomes, which may have to be further included because they are not part of accounts. If you understand this, then our reconciliation is still incomplete. Now, I will give you example. You have to give me the treatment. I'll give you example of value first. The example of value is now for this depreciation and only of these two items which are part of PGBP. The depreciation of both these combined, let us say in accounts is 5 lakhs. But when you look at the PGBP provisions, section 32 of PGBP, that is of Income Tax Act, read with rule 5 of income tax rules, the same amount as per business head should be 7.5 lakhs. That is in this P&L, if you are redrawing the P&L, this amount which you will consider will be 7,50,000. So this is the difference in the value. So the item is there. This depreciation is to be considered here also, but the amounts are different. Now, what you will do in reconciliation for this? Because again, please understand the simple ideology. I have taken starting point as the net profit as per accounts, P&L. This net profit is derived taking 5 lakhs as depreciation. I want to derive PGBP where the depreciation should be 2.5 lakhs. What should I do in my reconciliation to adjust this? Tell me. Anil, keep your questions pending. I'll answer all questions at once because if I start taking questions in between, others may get confused. So whatever are your 2, 3 questions which I've asked in between, I'll answer them. But after I complete this whole format so that there is no confusion. See, this is simple maths, huh? So whatever your answers are have to be based on simple maths. And see, this is where student gets confused with the format and they start believing that PGBP head is difficult. But right now, whatever I've just explained has nothing to do with income tax provisions. It is simply related to your reconciliation concept, which you studied in accounts. And what right now I am discussing of this depreciation, this is also simple maths. So I'm telling you this because till now I have not started the PGBP provisions because I want to make it clear that understanding the format is a different subject. It is what you studied in accounts. It has to do something with maths because maths means not the calculus and the integration maths, simple maths plus minus maths. And then after all this, we will study PGBP from the Act, which will be the secondary part. First, understand the provisions there. Chalo, few only of you have answered. Now, this time, interestingly, I have mixed answers. Some are saying add, some are saying less, some are saying something else which I have not understood. Ashlesha, you are asking, is this depreciation arrived after income tax working? Yes. See, this is what is the income tax provisions which we are yet to study about business head. So like how you studied provision for house property head, you studied this residential status provisions and salary head computations. Similarly, business head has its own computations. So in business head, you have a separate working for depreciation that when we will study, you'll understand. So yes, you are right. It is as per income tax working. Students, the answer is maths, and the answer is it should be subtracted. Please, first you have to understand this before we can proceed. Because I repeat, till this point, I have not explained anything from Income Tax Act. Why? Because even if you understand the income tax provisions, you'll understand them, you'll learn them, you'll recall them. But still your answer will be wrong if you don't understand this reconciliation, which is simple maths. So I'm giving you the answer in this reconciliation format. I'll put it here in my less column. I'll do just one thing. I'll remove all the details part because that you know what details will come under each category. So under this and this category, what details will come now you know. What I want to do is I want to put one more item here. What is this item? The difference of this 2.5 lakhs. Now the only question is whether add or whether less. I have given you the answer less. Right? Is this understood? Why less? So depreciation 7.5 minus 5. So here in the less, I will have one item for this depreciation difference. Anybody has a question with this? Anybody has a question? I'll give you one more example for this value. Let us see, maybe whoever is having some confusion difference may get some relief or some answer. So one more example for this value difference. So purchases in accounts, you have taken 25 lakhs. Now, because of some additional information given, your answer comes as per PGBP. So the PGBP provisions say that in PGBP for this year, we will allow you only 22 lakhs for this purchase item. So the expense which you can deduct while computing your PGBP income towards purchases is 22 lakhs. So this is second example of the value difference. Now, what is to be done for this second item of difference? So 3 lakhs is the difference now. Only 4 answers. What about others? Only 4 answers. Excellent. This is same for everyone. Then why was the depreciation answer different? When we were discussing about the difference of depreciation, you all had given mixed answers. Strangely, now everybody's answer is same and everybody's right. But I'm not understanding. So what happened for Mustafa? What you have written, just read it again. Depreciation we already minus extra. Is it extra or less? Have you minus depreciation extra? Please check. In fact, what depreciation you have subtracted was less. You had to subtract it further. That is why the depreciation answer 2.5 lakhs is less. Mustafa, your explanation, I'm just changing one word. Please understand. If you understand that, your answer will be. So what was there to listen? I have written, beta. You have to see from the figures. That is why I'm writing things on the screen so that there is no confusion. So students, for purchase difference, you all have correctly said that what I have to do for this purchase difference, I have to add the difference. Agreed, na? Perfect with everyone? No issues because I'm going to give you all more examples. Correct? Super. Very good. Now, Still on the value. I'm yet to come on the second type. This I'll come after a few minutes. Let me give you a few more examples. Now coming to the sales side. Let us say the sales that you have considered over here is 50 lakhs. And as per PGBP provisions, what we are going to study, the sales that you should consider is 48 lakhs. Now what we do? Neeraj, you're right, beta. Deferred tax, liability, deferred tax asset, deferred tax liability. If you're referring to that accounting standard, you're right. Okay, chalo, answer me. What I'll do for this difference in sales? Excellent, excellent, super answers. Again, everybody's perfectly right. So this sales difference will be here 50 minus 48, 2 lakhs. See, this is the simple maths which I'm saying you need to understand. Shraddha, you are giving me answer or you are asking me a question? Because after the word which I assume to be answer, you have written a question mark. So is it you are asking me a question or is it you are giving me an answer? If it is an answer, it has to be with a full stop. Okay, getting this? What is not understood, beta? Now let me give you one word example. What is this word example? Okay. Now till now I gave you directly money, not money, value examples. That is example directly where figures were given. I'll give you a word example. So salary debited is 10 lakhs. Okay. In your accounts. And in the additional information, it says salary includes rupees 2 lakhs paid to accounts teacher of your child. So the salary debited above 10 lakhs, for that one additional information is given that it includes 2 lakhs of salary, which is paid to accounts teacher of your child, of your means of the assessee's child, whose PNL we are drawing. Chalo, what should I do? Good. Dhanalakshmi, just revisit your answer or give me the justification of your answer. Excellent. Very good, everyone. Um, Radhesham, beda. Not sorry, sorry. I think it is your dad's name. You have not written your name. What is your name, beda? Tiwari Radhesham. I think this is your parents' name. What is your name, beda? You have to revisit your answer. Acha, Tisha. Tisha, please check. Reconsider your answer or give me explanation. What is the reason for your answer? Okay. So, Dhanlakshmi, if you are saying if this is the reason, so will it be less because of this reason? Same reason. I agree. In fact, the reason is perfect. But will it make it less or will it make it add? This is the thing, students, which I'm trying to tell you, which you need to understand first. And it has nothing to do with Income Tax Act. It is purely the logical part of this. And many times I have seen that we make mistake in that logical part. And that is where we are confused when we see the final answer. And suddenly we feel that, oh, Income Tax Act is very complicated or the provisions are very complicated. No, it has nothing to do with the provisions. No. It has to simply do with understanding this. So, now, hmm. So the effect of this is that the word adjustment says that this 10 lakhs, please understand this, students, how you have to understand it. Your accounts are debited with total 10 lakhs, right? It means this net profit, which we are taking as our starting point here. So see, this is important. We are starting our PGBP working with this net profit. So this is the key point. We have to keep this point in mind that we are making changes in this net profit. Remember this. So whatever is already part of that net profit, either in the form of expense or income, we are trying to amend that. Now, in this net profit, which we have taken a starting point in PGBP working, you will find that in that net profit, this 10 lakhs is already subtracted. You got the net profit after subtracting this 10 lakhs. Now, when you read this word adjustment, you realize, and many of you have mentioned it correctly, it is a personal expense. Now, we have just discussed at the start, we only want those items which are related to business because we are computing PGP income. So first, we will remove effects of items which are relating to other heads. Plus, we will remove effects of items which are personal, which has nothing to do with business. Now, when you read this word adjustment, what you get to know is that as per this word adjustment, one second, there's some issue with my screen. What? 1 second. Okay. Now, since this amount is a personal expense, correct? So we understand this, or we have to understand this, that it is not part of business. And if it is not part of business, but it is already subtracted. So when I have to nullify the effect, what I have to do is I will have to add. So 2 lakhs here, I will add, which is salary relating to what? Salary in bracket personal expense. Since it is not part of business, but in this net profit, which I'm taking from the P&L, in this net profit, the effect of 10 lakhs is minus. You have to understand it like this. What is the effect in this net profit? 10 lakhs is minus. Is it allowed in income tax PGBP? Answer is no. So if you have to nullify that effect of minus, what you will do is add. Correct now? I hope Dhanashri now it is clear to Dhanalakshmi, sorry, it is clear to you better. Yes, perfect. Disha, I hope it is clear to you also better now. Nagaraja, very good. Excellent. Now, now let me give you further examples. Further examples of what? Further examples of this. Now, what is this? When we will study this PGB provisions, you will realize that there are many things, and you'll just give me 2 minutes. Let me complete this format first, then I'll take everybody's questions, right? So, when we will study this PGBP provisions, you realize that there are many things which are not in accounting P&L. Again, reason is what? Accounts has its own standards, its own logics. So as per accounting standards logics, it is not part of accounting P&L, but as per PGBP provisions, it should be included in PGBP. So we have to now give effect to those items. Again, remember this. Our starting point is this net profit of accounts. You have to always keep this in mind that whatever we are doing is because this is our starting point, and from this I want to reach the PGBP income of account of income tax. Now whatever is added and subtracted in this, I'm first nullifying their effect if they are not part of PGBP. And what is not at all in this accounting net profit means it is neither debited in P&L nor credited in P&L, but I want that in PGBP because of income tax provisions. Now I'll have to also give effect of that. Correct. Now, all this you will get in the word adjustments only. That is in the additional adjustments or additional information given below. So I'll give you firstly the adjustment in short. So it is written here that rent pertaining to some year allowed as deduction. So I'm giving you amount rent pertaining to whatever year rupees 5 lakhs allowed as deduction in current year, not debited to P&L. So what P&L is doing, we all know P&L is considering the figures of this year, but PGBP has some provisions whereby it is allowing you rent of some past year as deduction in the current year. So in that year, PGBP did not allow you deduction of rent, but it is allowing you that deduction now. Accounts is prepared year-wise strictly. So since it was rent of past year, accounts did not show that rent in P&L. Now this is a rent, which is a debit side rent, not a credit side rent. So it is a rent expense pertaining to some earlier period, hence not in your P&L, but as per PGP provisions, which we are going to study, PGP says, I did not allow deduction in that year, I will allow in the current year. Now for this 5 lakhs rent, what we should do, because it is not finding place in P&L. Navneet, I think there is a typo error in the amount. Please confirm. Very good. So for this rent, there is no effect given in accounts correctly as per accounts. And anyways, we are not going to test the correctness or otherwise of account. We are not bothered with that. That is not our work here. But we have to give the effect here because we want to correct it here. Excellent students. Very good. See, please keep always one thing in mind. See, now you all are having perfect answers, and I'm sure at the start, whoever had confusion with that depreciation difference, I hope now you are also clear because now everybody is giving me perfect answers. So I'll repeat, just keep one thing in mind. What is that? Our starting point in PGBP is this, which is a figure coming from your profit and loss account. And this figure has some minus and some plus. So credits in P&L are plus in this figure, debits in P&L are minus in this figure. Just keep that in mind whenever you are deciding on any treatment, right? Clear enough? So you all are correct. This amount has to be subtracted. Now see here I had written something, right? Now I'll write something in the similar fashion. Expenses not debited to profit and loss, but allowed as deduction in PGBP. So I've written this. So what is subtracted? 1, 2, and obviously the amount differences. So what is subtracted? Expenses not debited to profit and loss account, but PGBP says, "Bhai, we want to deduct it." Ashlesha, you are correct. But again, don't generalize anything. You cannot generalize this point also, though you may be correct. Why? See, I'm giving you this instruction. I gave the similar instruction to Pooja also, because you all are developing your understanding perfectly. But the moment you give some such type of generalized uh, answer to yourself, what happens, beta? Maybe you will be looking at all the adjustments from this glasses. Okay, you may get right answer in 90% cases, because in 90% cases, this is what will happen, what you are saying, or what earlier Pooja was saying. You both are 100% correct. But 10% scenarios may not be this, may not fit into your understanding. And that is where, if you keep this rigidly in mind, it may go wrong. That is why I'm repeating one thing again and again. Sorry. What? Just keep one thing in mind, that our starting point is this, in which debit items of P&L have been subtracted, credit items have been added. With that in mind, if you proceed to every adjustment, you will never be wrong. But yes, I agree to whatever you have said, whatever earlier Pooja had said, it is all correct. But I don't want you all to generalize. Yes, yes, so you're right. Correct. And one last adjustment, that income from insurance claim received for loss by fire, for loss of stock by fire, rupees 3 lakhs, not considered in accounts. So what is this another word adjustment? There was some fire, so there was a loss of stock by fire, against which you have received insurance claim, but it is not considered in accounts. Chalo, tell me, what should I do of this? Shraddha, just ask me this question after 5 minutes so that I don't mix different things. I'll be taking everybody's doubts. Anil's 3, 4 doubts are pending. So just keep this pending so that I just first complete the format. So that otherwise, see what will happen. Other people, for them, if I'm talking different things at the same time, it may get a khichdi. Yes, students. Chalo, tell me. Nagaraja Beda, would you like to explain your logic? Aslesha, we are talking about the revenue. See, the loss has happened in the past. We are not talking about the loss. There are two aspects whenever there is something like loss by fire, loss by theft. One, there is a loss, and the other, there is the insurance claim. We are only talking about the insurance claim. So obviously it is implied. I understood your point because in accounts you are net off, but that is when both things are in the same year. Even in accounts, if both things happen in different years, like in this year you have a loss, but by the end of this year you are not knowing that whether there will be any insurance claim given by the company because the company has its own standards, or you do not know how much would be the insurance claim. So in that case, what you do in accounts also in the current year, you will show the complete loss. And in the future, whenever the company informs, you will take it as P&L credit. Correct, na? Nagaraja, have you changed your answer, beta? So, students, answer is correct of everyone. Once again, what I have to do? I have to add. But again, I'll write something. I will say incomes not credited to P&L but taxable under PGBP. So now you have got four rules. On addition side, two rules. On less side, also two rules. Correct na? ठीक है ना? Everyone clear with this, students? Pakka? So these are all the adjustments, all possible adjustments. Obviously, it is still going to come with a lot of application of mind. That is what we are going to understand further. But this is the main thing. So let us take our break. Then post break, we will connect to understand this in much detail. Correct? With also answering your queries. Thank you, Harsh Beda. Thank you. Okay, so 15 minutes break. Kuldeep, I'll take everybody's question after the break, right? So let us go for 15 minutes break. Now, if you all have understood the format, let us take this ahead. First, your queries, then we go to the detailed format, and then we come back the other aspects. So now all your queries. So Mustafa is asking expense, if expense will be more added then less it, and if expense will be less deduct then add it. Bapre. Mustafa, what you have said, interpreting that will require more efforts for me. Income, if income will arrive more, then less it, and if income less deducted, then add it back. And simple, if income give, just less it. Mustafa, it is more like a poetic way that you have drafted this. And really, I'll have to think on each and every part because see what happens, what you are writing, what you want to convey. So I will not say yes or no because it is not completely correct. It will require some tweaking. HP is appreciated, how we depreciate. See, understand one thing, Aditya. In PGBP, we never do revaluation, correct? And if you are talking about accounts, then simply if appreciation you have done, how you would have done appreciation? By adding that much value to the asset and creating a parallel reserve in the accounts. So if you have created the reserve, now reduce it from that reserve. And if you had simply credited the P&L by that amount, now debit the P&L account. There is anyways a special provision called as impairment of assets, which allow you to do reduction in the value of asset on the basis of its true value. Okay. Chalo, Anil, Shraddha, two, three people had some pending queries. Let us take up your queries. Yes, tell me. Chalo, students, fatafat, ask me your queries so that I can restart the technical part. Yes. So see, this is the format which you are going to follow. What is the format saying? You start with the net profit of accounts. So always keep this in mind that certain things which are debited to P&L are already subtracted in this. Certain things which are credited to P&L are already added to this, but only which are debited and credited to P&L has an impact on this. What is not debited or not credited to P&L has no impact on this. Now, once you know that our starting point is something which is linked to P&L, now all these points will make relevance. First, in add, what you have to add? Those expenses, item means expenses, which are debited to P&L but are not deductible in PGBP. Similarly, in add, you have those items. Now here item means incomes, which are not credited in P&L but are taxable under PGBP. I've already explained this with multiple examples. Now this is just putting it in language form. Similarly, in less, whatever incomes, item means incomes here, credited to P&L but not taxable under PGBP. So in fact, we started with these two first, and then we went to the other two. And then less, those expenses which are not debited to P&L but are allowed as deduction under PGBP. Correct? I hope this is understood and clear with everyone. Okay, now I have questions. Neeraj is asking, sir, whether we will take PAT or PBT. Neeraj, that makes no difference. It is your choice where you want to start from. So even if you are starting from PAT, that is profit after tax, or you are starting from profit before tax, you have to just understand, like in case of profit after tax, there is one more figure debited to P&L, which is of tax. So in that case, what has to be done of that tax? That tax has to be removed. And if you are taking the figure before tax, that is PBT, then tax is already not debited. So from where you want to start in the P&L is your choice. Just you need to remember, like you have the items below the line, above the line. What is below the line? From P&L appro, there also you get the balance figure of profit. So from wherever you are starting, you should know that, okay, in this profit figure, these are added and subtracted. So that accordingly you can decide what to be done of those items. Correct, Neeraj? Now, Anil, sir, trust, okay, will not be covered under this head, right? As it is not for profit. Very good point, Neeraj, Anil. Students, please keep in mind, Income Tax Act has nothing to do with profit motive. Now, tell me one thing. Now you're talking about PGBP. What about HP? What about capital gains? Is it with a profit motive? May not be. I'm having some investment. I've sold that when I am getting a good price, or let us say I'm in need of money, or let us say I want to invest the money at somewhere else. So I'm selling my present asset. Capital gain is arising, or till it is sold, I'm renting it out. So HP is arising. In entire income tax, there is no condition anywhere that there has to be a profit motives. Also, equally in PGBP. When we see the definition given, they have clarified that there is no intent or no compulsion of profit. See, I'll show you. So this is the definition of business and profession both. In that they have themselves clarified, and students remember this. The same is the definition, similar is the definition even under GST. In both definitions, you'll find this thing common, that there is no need or no compulsion that there should be a profit element. So that is not required. Even without profit element, you can be covered under this head. I hope this is clear, beta. Next question. Sir, how will department trace income expenses which is not accounted in books? See, Anil, department will not trace anything. Now you want to claim that these are additional income expenses. They will ask you the proofs. You have to give them the proofs proving that, yes, see, this is my additional income or expense which is not part of accounts. Very good. ठीक Any further questions pending, students, from anyone? Yes. Anybody's questions pending? No? Fine. So students, this is our format. And yes, Ashlesh, I'll be sharing these notes. But why I don't want to share beforehand? Because if before explaining I would have shared this and you all have come read, it is more a theory in your head. Now this has first become a practical and then we are reading theory. So it makes more sense. Now this entire reconciliation is derived following two steps. First was segregation. So in first step, what you have to do from P&L, you have to identify those incomes expenses which are already debited, created in P&L, but are not part of P&L. So you have not part of PGBP. So you have to adjust them. Second, for the remaining items, which you say that these are business items, but wait, check the PGBP provisions, whether PGBP provision is allowing them to be added, subtracted, and what amount. Only that amount will be added or subtracted. So in two steps, you complete the reconciliation. This is very straightforward because by reading the names, you'll identify. For this, you have to study the Income Tax Act, especially with respect to this chapter, that is the chapter of PGBP. Shraddha is asking, sir, for reconciliation format, we should know all items of PGBP. I think no means KNOW, no, right? Yes, obviously. So what are the items of PGBP? And in fact, you had an earlier question also, ki, sir, how we'll know what is to be added, what is to be subtracted? So both your points answer is that you'll understand from now what we are going to discuss, that is the PGBP provisions. So what is to be added, what is to be subtracted, and what are the different items in PGP? That is now what we are going to study. So that is what is this part. So now we are on the technical part of this subject, that is the PGBP provisions. Correct? Now, I have given again the same elongated P&L format. So this will also help you understand. So, but this is a technical format. Why technical? As you can see, I have given reference to section numbers everywhere. So with sections, I have tried to explain what is covered in PGBP, what is not. So for understanding this technical P&L, we'll have to first understand the PGBP provision. So let me start. So we'll come back to this P&L. This is also not a full and final. There are things to be added, subtracted. Fine. Now we are on step two. Now, once you have done step one is what by names you have segregated. Okay, these items are of HP, other sources, etc. So you have identified them. And in reconciliation, you will adjust them by doing add or less. That will be done. But for all other items which are left, which you believe to be of PGBP, and for all those items which are not given, but they are supposed to be in PGBP, how do you know? The answer is you know by reading the provisions of PGBP. Now, PGBP Act is contained in section 28 to 44. Just number wise, they appear to be some 16, 17 sections. They are 50 plus sections. How 50 plus? Because in many of these sections, you have ABCD, you have clauses, like see, either you have capital alphabets, you have clauses. Then in many sections, you have so many huge lists in different subsections, subparts. So even though number wise it appears to be 17 sections, but actually it is 50 plus sections. But having said this, let me tell you again, as I gave you approach for practical, now I'm going to give you approach for theory, how you will be able to study and remember and even apply all these provisions. That is what we will be doing in this and the next lecture, where we will try to cover the entire PGBP provisions with the point of income tax law. Fine. Now, as I said, these are the total number of provisions, but I divide this also into two parts. First is provisions which deals with practical sums, which is from 28 to 37. Then there are some provisions which is creating restrictions, that is from this. So basically you can say both are for computation. And then you have procedural sections, which is 44. 44 itself is more than 12, 13 sections because you have A, double A, B, etc. So many things in 44. So now what we are going to cover is this 28 to 43, and 44 we are going to deal with separately. Now, all this together combines makes your computation provisions. Now for computation, again, to understand it, I'm dividing it, keeping the P&L format in mind because we are very accustomed to P&L right from our commerce childhood. So even understanding PGBP from P&L perspective. So just visualize my first format. You are making the PGBP P&L. So that will help you understand the provisions in much better manner. Now, if you are making PGBP P&L, so you should know the items which will be on the credit side and items which will be on the debit side. So I've divided all the sections from 28 to 43 into two categories. One is the debit side provisions, that is, in other words, provisions relating to expenses, and the credit side provisions, which in other word means provision relating to incomes. Correct? So from here, students, you will get to know what are the various incomes and what are the various expenses that are to be covered in PGBP head, and also what are their respective calculations, what are the respective special effects or any special provisions related to them, right? Now, when we come to the income side or the credit side, as a relief, there are only three sections and around 40 sections are here on the expense side. But even those 40 sections would be easy to understand with a proper approach. But for the time being, let us understand these provisions both of income and expense side one by one. Now, when I come to income side provisions, let me write somewhere. Okay, here. What is section 28 saying? Now I'll request you all to read certain things at your end at home for better understanding. So there is a big list given in section 28, a list of all those incomes that would fall under PGBP. So as I think Sharda was asking, Shraddha, sorry, was asking, sir, how will come to know what is included in PGBP both on the debit and credit side? So for that, you have to refer these sections. Now, section 28 gives you a big list, but I will give you one simple logic because I want to uh, explain you and I want you to develop these provisions from the practical perspective more. Theory you can read, you can ratify wherever required, but that will not help for practical. For practical and in real life application as a chartered accountant, what is required is what I'm going to explain now. So section 28 in application is what? It simply says that what will be covered in PGBP are revenues, both direct and indirect, arising from your business or profession. So one line. See, you should know application wise what is what section doing. Yes, theory wise you have a huge list. Why you have a huge list? Because over a period as new things started coming and there was a confusion, there was a doubt that whether it will be covered in business head or capital head or other sources head, the act started adding the items in the respective list. So you have a very huge list for other sources under section 56. Similarly, you have a list over here under section 28. Now, the list basically covers what? Obviously, we are talking about income, so it has to cover revenue. But what revenues can be taken in PGBP head? It has to have some connection with your business or profession. The connection may be direct, indirect, that is okay. But if something has no connection with your business, it will not be covered in PGBP. Now, what do you mean by a direct connection, that is income arising directly from business profession and indirectly? I'll give you simple examples. So I'm a chartered accountant. I'm into consultancy. So when I get fees for my consultancy, that is my direct revenue arising from my business. Some chartered accountants are engaged in compliance, so they do audits, they do written filing. So when they get their fees for the written filing or for the audits, again that fees is a direct revenue arising from their profession. Let us say one of you is a transporter. So I'm giving you the example of what would be direct, direct revenues. So for me, it is fees. For a transporter, it is the freight that the transporter is getting. For a hotelier, it is a room charge or room rent. For a restaurant person, it is the amount of the food bill that the restaurant person is getting. And you can add names respective to every business. So those who are traders, for them, it is simply sales. But for services, you have multiple names depending upon the nature of your business. So direct is in fact more easy to understand. Now in direct, there is something interesting. Now see, some heads are overlapping, like HP. Now, if you are giving your property on rent, that income has to be covered in HP. But if you remember charging section of HP, it has one exception. What is that exception? Which is also covered in section 28, which is our section of income or revenue for PGBP. It says that if you have a commercial property, I think somebody has put in the chat. Let me see. Yes, right, Nagaraja. Yes, correct, Divya. So if you have a commercial property which is given on rent, but this is not sufficient to bring it under PGBP. You have given commercial property on rent and renting is business. So you are in the business of giving properties on rent. See, one is I have purchased one or two properties out of my regular, let us say, salary or other sources of income as an investment, and I'm giving that property on rent. It may be residential, it may be commercial. Both will come under HP head only. But where I have started a business of properties, and as a part of my business, I have taken properties at multiple locations, prime locations, and I am giving them on rent, on lease, and doing this is my business. Then, if it is a commercial property and giving on rent itself is a business, that is what is my business. So, see, some people are into real estate business. So, if I'm into real estate business of renting and the property is commercial, the law says the income goes to PGBP. Similarly, there is some overlapping with salary and other sources. There is some overlapping with CG. But when I'm saying overlapping, there is no confusion. Overlapping means you will find similar names in both. Like for interest. Now, general rule is interest will be covered in other sources. But where interest is on loan, and again, I am a bank. So, giving loans is my business. In that case, the interest which I will receive on those loans will always be my PGP income. But if again I'm receiving interest on my loan deposit advances, and these loan deposit advances are made out of my surplus money. And giving loan is not my business. But yes, somebody asked for loan, I had surplus, I said, okay, I'll give you, but I want interest, and the person is paying me. It is not my business. In that case, all that interest coming from your FD accounts, coming from your saving accounts, coming from some loans advances you may have given to someone known to you is not business. So it goes to other sources. So these are some overlapping items, the names of which you find in multiple heads, but there is no confusion. In fact, where the Act itself has given it in multiple heads, you should be assured that there will be no confusion. Why? Because the Act has also given the specific conditions, like for renting. It is specifically said that if it is a commercial property and it is given on rent where renting is a business, it will fall in PGBP. All other rents will fall compulsory in HP. So this is how the law itself has differentiated. There a specific logic or order to remember which section fall under practical versus restricted? Just wait, Sadia. You'll get answer to everything. I think what you want to know will be clear as we proceed. And don't worry for the section numbers right now. Don't worry. Section numbers will become part of your biology. That is your body, your mind automatically. How? Whenever you are reading, whenever you are talking about a subject, always include in your words the section number. So if I have to tell you anything, I should refer to the section. Now, what will happen? Initially, I don't know the section. So I will take a book, I will read the section number from book, and I will talk to you. I am repeating this again and again and again. After 10 times, I will keep the book aside. And now when I'm speaking to you, the section number is coming out automatically because it has become part of my biology. But for the first time, you have to do this as a proper effort, as a focused effort. You have to take it as a specific, what you say, conscious effort. Do that. Section numbers will become your biology. When I say biology means it will be you. Like how you speak anything to any of your friends comfortably without referring to any book or anything. Same thing you will be able to speak about the law, about these sections. But for the time being, right now, my interest is more in the logics, in the provisions. So section numbers, though I'm referring, I'm not expecting that you all speak in section numbers immediately. Okay, let me tell you. Now, for me, learning section number is again going to become an effort. Why? Because from next year, you have the new Income Tax Act. I may be well versed with all the sections, but this is of the old act. So, like you, now I have also started learning the section numbers. How? The same method. Whenever I'm talking to anyone, I make it a habit that I refer the new act and I use the section number of the new act. Simple. I could have done it here also, But why I'm purposefully avoiding it? Because anyways, you are studying the old section numbers for the first time. If I start parallelly telling you the new section numbers, which actually I want to do because that will be my practice, but then that will be creating a lot of confusion. So I'm avoiding it right now. Otherwise, this is my method of learning, which I did when I was studying, and I always recommend that simply take the book. Mustafa is asking, sir, is this your last time you're teaching this act? No, beta, it will still continue for 2, 3 more years. Don't worry, this is not the last time. In fact, for y'all, it will be easy that y'all will be studying only one act. For me, it is going to be difficult because in next 2 years, maybe starting from immediately after 2, 3 months, I will be parallelly teaching both the laws if required. If even if not teaching in my practice, since I'm into consulting and since I'm into litigation practice, I will have to refer parallelly both laws because I will be having cases of old laws which I'm fighting in courts, and the consultancy work may come for both old and new laws. Some work may have overlap. So for me, in fact, it is going to be challenging for y'all by the time y'all come into finals and y'all become CA, you will be only studying the new law. So, but that is the fun. Now coming to the indirect revenues. Now, what are indirect revenues? Indirect revenues are the ones which are not clearly known that, okay, this is business only, but it has a connection with business. Now, I'll tell you what. In case of indirect revenue, the simplest example, again, taking off our offices is now in our offices, we regularly have the old Raddi. Raddi means the old used papers, files, which are now no more relevant, or some old junk parts, some old furniture. All these are regularly in 6 months or 1 year discarded. How do you discard? We call some raddi wala, some bhangar wala, ask them to take it, and they pay us some very nominal, whatever they consider appropriate. So I receive some amount periodically, may not be regularly, but after some gap, whenever I discard this all old items from my office. Now, this is not my direct income from business. Why not direct? Because I'm not in that business, but it is arising from my business because these are all originally used in my business, consumed for the purpose of business. And now, after getting discarded items or obsolete items, I'm selling it off. So, this is one example. Similarly, again, every business has similar parallel revenues. Now, many times you may have some commissions or some small discounts or some similar other miscellaneous incomes flowing, which has a bearing or a connection to your business, and hence they are always considered as part of PGBP only. So even in your sums, if they give you some miscellaneous income, other incomes, and nothing is mentioned about as to what it includes, then you will always comfortably include it in indirect revenue. Now I'll use one more term, special incomes. Now why special? Not special because there is anything special, but because it is new to you. So if you are receiving some compensation for loss of business, that compensation is also treated as PGBP income by Section 28. If you are a partner and you are receiving salary, remuneration, and interest on capital, this I'm sure you all know as a part of accounts. So as a partner, when you receive all these things, now salary should appear to go to salary head, but it will be PGBP income. Interest appears to go to other sources head, but it will be PGBP income. Why? Because you're not getting this salary as an employee. You're not getting this interest as an investment. You are getting this as the owner of the business. So anything that the partner gets in the capacity as partner from the firm by the name of salary, remuneration, bonus, commission, interest on capital, any capital, fixed, circulating, all this in the hands of partner is PGBP income. Then nowadays you have something called as non-compete fees. So somebody is into similar line of business and you are approached by that person saying that, boss, you are new to this business. I'm already in this business. Let us strike a deal that you will not do business in my field, in my domain. And for accepting this, I pay you a lump sum 10 lakh rupees. So you receive a lump sum 10 lakh rupees for not competing with that person, which is allowed as per the competition laws. It is not barred. This competition avoidance agreement is called as non-competition agreement, and the amount paid is non-compete fees. This is again considered as part of your PGBP income. So all these things you get in the list when you refer section 28. So when you refer that section 28, you will find these lists over there. So kindly read section 28 today. So firstly, the first item, which is part of PGBP credit side or income side, is section 28, which covers direct and indirect revenues arising from your business. Okay, now I come to section 41. I'll just read out this section. Now, students, when I talk about section 41, the other section about PGBP, credit side or revenue side. So I just explained what is covered in 28, right? So all this direct, indirect, everything is 28. Now let me talk about 41. Now 41 is something known to you in accounts. I'll give you example first, then I will explain you what 41 is saying. So you have something in accounts, commonly bad debts recovered. You all have definitely seen this in your childhood. You all have done various adjustments. Now 41 is covering this. What 41 covers? It covers expenses losses. But keep in mind, we are on the revenue side. So it is covering what? Recovery, reimbursement of expenses losses. So expenses have happened in past, losses have happened in past. Now you are able to recover it or you get reimbursement of it. That is what is covered in 41. Now what does 41 says? We will consider these as your incomes. What as your incomes? Your past expenses or losses, which are recovered, reimbursed by you. So you are recovering some amount, and this amount was your past period loss. Now, importantly, what is important is this expense or loss was allowed as deduction in PGBP in past years. So since this expense pertains to any of the past period, the requirement is you got the deduction. Now, what I mean by you got the deduction? Now, as we are going to study later the debit side of PGBP, this side. So you will study what are the expenses losses for which deduction is allowed, for which you have some rules with exceptions, you have some restrictions, disallowances. So you have to test that this expense or loss which you are receiving now, which is getting reimbursed, whether this was any time earlier allowed to you as a deduction under any of the debit side provisions. If the answer is yes, in the past, when I incurred this loss, I got the deduction under PGBP head. Now, since you had got the deduction, since you got the effect of treating it as a loss expense under PGBP, now when it is recovered, if I have to talk to you in accounting sense, it is like nullifying the effect or passing a contra entry. So when I say it was allowed to as deduction, then again visualize my first format. It means in any past year, you were able to debit it in the PGBP P&L. So that is what is meant by allowed as deduction. So let us say I'm talking about previous year 22-23. There was some bad debts. And as per the PGBP debit side provisions, which we are going to study later, these bad debts are allowed to you as deduction under section 36. So as per section 36, you satisfied the requirement, so you were able to debit it in that year's P&L, PGBP P&L. In other words, you are allowed deduction. Now we fast forward, come to the current year. So you are in the financial year 25-26. In this year, this bad debts was recovered. So you got trace of that person either through legal means, or let us say that person's conscious awakened, he changed his mind, he left all his wrong practices, and he himself came to you saying that, sir, I'm sorry, I want to repay your debts which I had not paid over past few years. So he comes and pays you the amount. So what you do? You will definitely call it as bad debts recovered on the credit side, because what you're doing in accounts, you are simply passing a contra entry because you had debited it. Now it is no more a loss, so you reverse it. Same logic. If PGBP has allowed you deduction, it is as good as you would have debited in any past PGBP P&L. Now, when it is received reimbursed to you, so you should nullify it. How nullify it? If you have taken deduction, now treat it as income. So what is 41 section dealing with is section 41 deals with past expenses and losses which were allowed as deduction under PGBP are now recovered, reimbursed. This can cover anything. It can cover bad debts. It can cover one example which I took previously, loss by fire. So you had taken deduction, you have shown the loss. At that time, you're not knowing whether you'll receive the compensation or how much. After 2, 3 years, or maybe after some court proceedings, you were allowed the insurance claim. That is what will be credited. So any amount which was your business expense, business loss of past years, now recovered by you, now reimbursed to you, is your PGBP income. Simple logic of accounts, debit, contra, credit. Now here in PGBP, this point or this condition is very important. What is that point or condition? This amount should have been allowed to you as a deduction earlier. If because of PGBP provisions, like here you can see there are some restrictions, disallowances, which means that you may not be allowed some expense as deduction, right? PGBP is not going to give a deduction for every expense you are asking for. Same like HP. You are not given deduction for all expenses. The law decides what they want to allow you as deduction. Similarly, in PGBP, in all these sections, we'll study there are some conditions, restrictions, which may ultimately not allow you deduction. Now here, any expense or loss of past period was not allowed as deduction in that period. If that loss is now reimbursed, recovered, it will also not be treated as PGBP income. So simple. Here, if debit was not allowed, why? PGBP restriction said no deduction allowed. Sorry, forget your loss. Then okay, if I recover the loss, I will also say forget the income. If loss is to be ignored, income arising by recovery of that loss by default has to be incurred. Because if no debit, then no need of contra credit. So this point is only important in 41, that when you are reading the question, because see, these are the tweaks that they do in the adjustments, that they will say that this bad debts is recovered, but in the adjustment or in the addition information, they will say, but it was not allowed as deduction. This loss is reimbursed or recovered, but it was not allowed as deduction. So you have to be clear with this part, that what was allowed as deduction in past and recovered now can only be taxed now. If not allowed as deduction in past, even though I'm recovering it or receiving it now, it cannot be my income. This is 41. And then comes to 43 CA. Now this 43 CA is a very special, unique provision. Now I'll explain it somewhere here. Now what is this 43 CA dealing with? Students, this 43 CA is dealing with builders or real estate businesses. Now, what is their business? Their business is selling properties, which may be land or building or both. That is what is a real estate business, or that is what a builder do. Now, please pay attention because this is slightly technical. Now, whenever you are selling a land or building, two things are immediately applicable. One is stamp duty, one is income tax. So, whenever you are selling a land or building, the state laws, you have state laws relating to registration and stamp duty. They say that register your sale deed. Otherwise, we will not accept it as a sale. So for immovable property, it is compulsory to register the sale deed. And when you go for registration, the state government imposes stamp duty, which is different in different states because it is a state levy. Fine. So one duty or tax on your transaction of property is stamp duty. Another, since it is going to be profit, it is income tax. Now, over the period, people derived a uncanny or a improper way of avoiding tax. What is that? Let us say their actual deal of that property is of 2 crores, but on their sale deed, that is what they are showing officially to the government. So I will say deal means your actual price and the price which you are showing in your agreement, that is a sale deed, you are showing it as only 1 crore 20 lakhs. This is what is black and white also. So 120 is white because you are disclosing it to government, and 80 lakhs is what is black, which you are hiding from the government. Now, by doing this, since you are showing less price, stamp duty, you are paying on less price, you are saving stamp duty of 80 lakhs. You means the buyer because buyer is liable for the stamp duty expense generally. And the seller, that is the builder, real estate developer, is also benefited because he is showing less income. Instead of showing 2 crores as sales, he is showing only 1.2 crores as sale. So automatically his net profit will be less or it will result in a loss which he can set off. So both were in a win-win position, and this is how this practice developed, and it virtually became across India a standardized practice. That anywhere where people are dealing in real estate, whatever price is fixed, immediately the next question is how much white, how much black. Now, to avoid this or to stop people from doing this, there are other measures. Right now, taxation law is least bothered about how to stop them. That is not the requirement of taxation law. Their requirement or their perspective is I should get my tax. So what they did, firstly, this was done by the state government. They brought in a concept of themselves finding a value. So that the state government started making a list of properties of different types like bare land, agricultural land, residential land, commercial land, and then list of properties also in terms of building, like what type of building it is. Is it a commercial building, residential building, bungalow, or any other type of special structures like stadium, malls, etc. And then they started fixing a value. For what purpose? For the purpose of computing their stamp duty. Hence, this value is known as stamp value or value for stamp duty. So you can call it as stamp value simply. Now, what they did is, now see, this is not known to anyone. This is only between you and the seller. What you are showing to the world, to the government, to everyone is this. Now the government said that, okay, we have a stamp value. That is an artificial value fixed by us. Let us say the artificial value for your property as per the records of the government is 1 crore 75 lakhs. Now they are saying, boss, you will have to pay stamp duty on the price whichever is higher. This is the price which you are showing. This is the value as per our records or as per our calculations. You have to pay stamp duty on whichever is higher. So this is how, firstly, this process started in state, again adopted by other states because they found it very fruitful. And then one fine day, when Income Tax Act was sitting in the garden having a cup of tea in winter morning of Sunday, Income Tax Act also got this idea that why not I adopt what my other friend is doing, that is the Stamp Duty Act. Why not me copy paste the same thing? So Income Tax Act also came up with this similar concept in two chapters. In PGBP by way of Section 43A and in CG by way of Section 50C. So the Income Tax Act also decided, let me implement it. Now, why two chapters and two sections? So where it is your business to sell these properties, like you're a builder or a real estate developer, for you the income is PGBP. So the provisions are incorporated in 43CA for PGBP. Where you are like you and me, where we have also purchased the property, but it is purchased like an investment out of our savings, and we are selling the investment. So the property which we are selling is not our business. So I had purchased some plot of land. You have purchased some flat. Let us say somebody has purchased some office or shop, and now you are selling it. It is your investment. It is your capital asset. So for you, the income is CG. But the logic is same because we want tax on proper value. Now, what both these points say? You have an agreement price and you have a stamp value. Now, what they are saying, compare both of them. First possibility, this is 100, this is 80. So what is the possibility? That's agreement value which you are showing is higher than the stamp value. No problem. What will be taken as your PGBP or CG revenue? It will be 100 rupees under respective sections. No problem. Second possibility is this is 100 and this is 105. It means now stamp value is higher. Now, one thing is for sure, government income tax is very kind. It says that, boss, I will not be so rigid that you have to pay tax at stamp duty value only, because stamp duty is an artificial value. I hope you'll understand this. Artificial, why? Because it has been just computed by the government. So there is a possibility that these values will never match. That is correct. Never match. Because see, this is your agreed value, which comes out of demand, supply, pressure, and so many things which you have studied in economics. And this is just an artificial value. So there is bound to be difference. Now, what they have said, we accept and appreciate this, that there can be difference, and hence they have taken a margin of 10%. Earlier, there was margin up to 20% during the COVID period just to promote that real estate sector. But now they have taken the margin of 10%. So what is this margin of 10%? That whenever your stamp duty value is higher, like in my second example, they say that do one thing, first find out this, what, 110% of your agreement value. How much it comes to? It comes to 110. So whenever stamp duty value is higher, compare it with 110% value, 110% of agreement value, compare it with this. Now, if this 110% is higher, then again the agreement value will be taken for PGBP or CG calculation. Why? Because we are allowing you difference up to 10%. So if there is a difference between your agreement price and stamp value up to 10%, we are okay. We will still take your agreement value. We will accept your agreement value. But let us say third scenario. This is 100 and this is 125. Now again, stamp value is higher. Same rule. Add that 10%, which I am allowing as the difference margin. It is 110. Again, compare it with stamp value. Still the stamp value is higher. So we had allowed you difference up to 10%. The difference is much higher. Now we will take the stamp value for the purpose of computing PGBP or CG incomes. This is what section 43CA in PGBP head and parallelly 50C in CG head says. So any head you go, wherever you are selling land or building, you have to compare your sale price with the stamp value so that you get the proper Answer, that is the amount that has to be taken for the purpose of income calculation. Students, there is some more technical part in this, but that purposefully I'll be taking in the next class so that it gets absorbed. If I explain everything in one go, it may be overburden on your innocent minds, if I can say so. So you are still very innocent, your minds are very raw. So let me not overburden with too many technical things at one. Already we studied the format in detail. Now we have started with provision. So I'm just informing you because this point is not complete yet. 43CA, 50C has some additional point, but in principle, this is what is the ideology. So in two scenarios where either your agreement value is higher or where it is lower, but the difference is not more than 10%, in both these scenarios, the agreement value will be your amount to be considered for computing PGBP and CG incomes. But where despite of 10% margin, your stamp value is still much higher, then the stamp value will be considered. So you will be computing your PGBP income under whatever head it is, PGBP or CG, by taking stamp value as your revenue and not the agreement value. This is, students, the provisions. I will stop over here. We will continue this in our next class. We will revise in brief whatever we did, and I'll continue with this provision by taking the further additional points. Lingar is saying, sir, it is guidance value of sub-registrar of stamp value. Yes, so guidance value means the rule is whichever is higher. Harsh beta, स्टैम्प वैल्यू गवर्नमेंट ने फिक्स किया 105, आपका अग्रीमेंट वैल्यू है 100। अब जब भी आपका स्टैम्प वैल्यू ज्यादा आता है, ये दोनों सेक्शंस बोलते हैं आप एक 10% मार्जिन ऐड करके जो अमाउंट आ रही है उसे कंपेयर करो, क्योंकि हमें 10% तक मार्जिन या डिफरेंस चलेगा। अब 10% आती है 110 और आपका स्टैम्प वैल्यू 105, तो हम 100 ही लेंगे, क्योंकि हमें 10% तक अगर डिफरेंस रहा तो स्टैम्प वैल्यू नहीं लेना। जब स्टैम्प वैल्यू 10% के डिफरेंस से ज्यादा है तब हमें स्टैम्प वैल्यू लेना है। सो ये 105 वाले पॉइंट में point is where after adding that 10%, so your this artificial value for comparison is 110, that is adding that 10% margin. If your stamp duty value is less, it means your difference between stamp duty and your value is below 10%, you will take your value. But where the difference is beyond 10%, you will take the stamp duty value. This is what is the meaning, Harsh. Correct? No, beta Mustafa. 41 is not having arrears. 41 is having recovery of past period expenses. Excellent, Kuldeep. So students, that is all from my side. If anybody has any questions, you can put it now relating to any of the points we discussed or anything you would like to share. Excellent. Very good. So students, can we conclude? Yes. So that's it all. Super. Very good. Please study. It is very important that your approach is perfect. See, things are not bound to be easy when you are at a professional level like that of CA. And don't expect. Our mistake is we expect wrong. Why to expect easy? I always say, boss, you should expect more difficult. Why? Because if things are easy, why people will come to you? People are coming to you because they are not able to themselves understand. Correct? Wow, Aditya is my favorite student. He says, sir, homework. So homework, Aditya, is you have to go to your module. I'll just show you the module. So in module, at the start, you have this reconciliation format. Just go through them. You will not understand major part of it. Why? Because as you can see, many places they are referring to section numbers. But what you have to only understand is this, what is written in bold. What is written in bold is exactly what I explained. Only four things are to be adjusted, to add, to less. That is what is written in bold. What is written inside this bold, you may ignore. Then the second part is computation of income between old regime, new regime. Forget that. Right now, we are not interested in old regime, new regime, so you can ignore that. Right? So forget about this old regime, new regime part that we will discuss later. Then start reading this meaning of business, what will be covered in business, what will not be, method of accounting, and then section 28, which is the list of all incomes that will be taxed under this head. Then read section 41 and then read 43C. So I've explained three sections today: 28, 41, 43C. You have to read all of this. 43CA, I again repeat, something is purposefully kept pending so that it gets digested. Correct? But still, you all have to come ready. That is the only homework, beta. So kindly follow everyone. And thank you. Thank you very much. Yes, Nagaraja, CG, section 50C is replica of what you are studying in 43C. Don't worry, Sridhar. Even if your attempt is late, continue with this batch. What will happen? You get the benefit of attending two batches, so the things will get consolidated. So forget when the next batch will start. You study, then this batch better. This is your batch. Since now you're already in CA, every batch is your batch because you are seeing we are having amendments continuously. So best keep studying, be in touch. The more you are in touch with subjects, even if there are amendments, even if there are changes, you'll understand. Okay, then. Thank you all. Thank you very much. Have a good day. Have a good learning. And yes, we are there at BOS to always support you in whatever manner is possible. So be connected and please attend lectures live. Inform all your friends who are in this course to attend the lectures, to see the past videos so that they will understand how much and to what extent BOS is supporting the students. That also without any monetary expectations. This is all for your benefit and your professional progress. So thank you all. Good day. We connect again. Please come read with these three sections. Yes, bye bye everyone. Very good day everyone. Sir, we can